For those that think I should apologize for writing a best-selling book, I'm not going to. The 1% in this country are writing all the books, and the 1% in this country are eating all the food, and the poor starve to death. Hello and welcome to another Smaulgld live stream. It is the 17th of April, 2019. And tonight's topic, dollar collapse, end of dollar hegemony, multipolar world. We've got a lot of updates on what's going on at the ECB, the Fed, and the People's Bank of China. We've also got some gold stories, some silver stories, and of course some crypto stories. So welcome Smaulgld mug stackers and game changers. Remember, if you don't have your Smaulgld mug yet, please go to smaulgld.com and order your Smaulgld game-changing classic or super classic mug, or head on over to the Smaulgld store and you can buy Smaulgld beer mugs, Smaulgld beer steins, pet bowls, and a whole array of Smaulgld products. It does help the site out, and you can also help the site out by supporting Smaulgld by sending a check or money order to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire, 03820, or by donating via Bitcoin, Litecoin, or making a one-time payment via PayPal, Patreon, or Subscribestar. Both Patreon and Subscribestar have subscription models where you can support Smaulgld with a small amount each and every month. All right, well, thank you again for joining me this evening. Also, you can buy your precious metals through the Smaulgld site, and there's links below this BitChute and YouTube where you can shop at SD Bullion, Money Metals Exchange, or Golden Eagle coins, and Smaulgld gets a small commission on any sale that's made through those links, and I will leave those links with you below this video. Okay, well, let's get into what happened in the markets today, gold, silver, cryptocurrencies, and get to our stories. The markets were relatively flat today. Dow Jones down 3 points, still above 26,000. NASDAQ down 4 points. These are de minimis losses. They're less than a tenth of 1% for the Dow, 0.05% down for NASDAQ, and 0.23%, so almost a quarter of a point down for the S&P 500, which is still holding above 2,900, and it was down 6 points. So that was the biggest loser of the day in total points, and also the biggest loser of the day in terms of percentage was the S&P 500. But all in all, it was a relatively tame day for the equity markets. Now, big day for palladium, up about $36 to $13.79. Platinum took a nice rise higher to about $8.87, but it was gold and silver that didn't really do too well today. The gold market fell $2.71, down a little bit, down 0.21% to $12.74 and 35 cents, and right now it's at $12.74 and 10 cents. So not much movement there in the after hours. Gold losing its hold on 1,300. Silver price closed $14.97. That's where it is at the moment in the after hours, and that was down 2 cents, or down 0.11%. So both gold and silver minor losers on the day. And what did that do to the unsustainable gold-silver ratio? Now, the gold-silver ratio narrative is just one of many that we talk about all the time, that the gold and silver, actually the silver pumpers promote the unsustainable out-of-whack gold-silver ratio. We've talked many times why the gold-silver ratio is where it is essentially, without going into great detail, because there is no 16-to-1 or 15-to-1 mandated gold-silver ratio like there once was in the 19th century. Today, silver has a different demand profile than gold. Gold is almost half monetary demand and the rest jewelry, which some of that jewelry is monetary or investment demand, whereas silver's investment demand of the total demand is only about 12%. The rest goes to industry and to jewelry and silverware. Okay, so there's your gold-silver ratio. What else happened in the gold markets today? Well, here's another one of these stories. You always hear another gold narrative pumper is, there's no gold at Fort Knox. They came and got it in the middle of the night, or it's all been leased out, apothecated. somehow the United States can hold on to its gold. At the same time, the same people promote a narrative that the United States is the big bully in the world and goes around and takes everyone's gold, but somehow they can't manage to hold on to their own gold at Fort Knox. It's a big scam. They won't audit it, and there's no gold at Fort Knox. People joke. They're so convinced of this snarkily. They say, I've got more gold than the United States has. Oh. Now, the United States has 8,133.5 tons of gold held at Fort Knox, West Point, and a couple other locations in the world. But you constantly hear these stories. They don't have any. It's a whole gold pumper story, which makes no sense, because if it was so important for the United States to have gold, as the pumpers say, they can just go and steal it from another country. But even easier, they can always print money and go and buy gold. And you can buy easily, because India does every year, 900 tons of gold without even moving the market whatsoever. You can add that every year if somehow some conspiracy was true, that some in the middle of the night, 4,500 tons just left Fort Knox or has been hypothecated. The whole story makes no sense, but it never stops. Well, there was a story today. It was interesting. It came from the U.S. Mint. You don't trust the U.S. Mint. That's part of the government. Well, they've taken a peek now in a story at the West Point Mint. And of course, you can't prove that those are real gold bars. They're just painted tungsten. You hear all this kind of nonsense. And it's designed to make you think that gold is super scarce. The United States doesn't have any. And the other part of that story is China's got it all, because Chinese are smart. And they read Sun Tzu. And they have gold. And they never talk about Chinese debt, which we're going to talk about in depth tonight in the entire world debt situation, which the United States is not the biggest offender, but that's the other part of the story. The United States debt is unsustainable. We just print dollars and the rest of the world works, and they're all judicious savers and they love gold. They wake up in the morning and they save gold, and the United States people are stupid and they don't understand gold. Okay. Well, there was also a story here in that link there, gold at West Point. Of course, if you believe in this narrative that there is no gold at Fort Knox, you're obviously going to believe there's no gold at West Point. I've heard on the internet the U.S. has no gold, and there's going to be a gold-backed yuan. You're going to believe that story, right? That story turned out to be a big dud. Comex default, that's the other one. Or silver shortage, they're pumping that one again. Or J.P. Morgan is buying silver eagles, and they're buying silver maple leafs. These stories never end, and it's all part of the end of dollar hegemony, multipolar world, dollar collapse, China's dumping treasuries. We're going to take a look at a chart and see how many treasuries China's been dumping. Then there's gold 10,000, gold 50,000, SDRs, and the reset. The reset is always around the corner. It's a mathematical certainty. End of the petrodollar, unsustainable. We're going to take a look at all of those stories. Those stories have been around for decades now. Of course, everything is unsustainable, other than, I suppose, gold is an inert element, and it will last perhaps forever. But all these stories are all designed to get you to act immediately, because there's an imminent collapse, an imminent shortage, imminent something or other, gold back yuan. Wait till that launches Basel III, and all the banks are going to run out and get gold now. It's a game changer. We hear this. It's amazing. I was looking at some Mike Baloney videos from 2010. Greatest wealth transfer ever is going to happen this decade. Of course it is. Gold and silver doing accounting. And people still believe this. Like, thanks for telling us this. Thanks for the information. I'm not sure what information you should be thankful for, but that's what we see in these stories. And I'm sorry I got to bring it up tonight, because I am still seeing these stories. The silver shortage stories out there again, the no gold in Fort Knox story, end of dollar hegemony, multipolar world, dollar collapse. They never stop, or they just recycle these stories. And then you get the whole, you'll see, or you can prove this, and you're a shill, and you're a disinformation agent. By the way, speaking of disinformation agents, I was on with Rory today over the Daily Coin. We had a great discussion about what's going on with the Bank of England and not returning gold to countries that have asked for it. So check that out. Had a good discussion on that, and that's over at the Daily Coin. I'll link it in tomorrow's show notes. If you go to Smaulgld every day, I try to put in as many of the charts and other comments, other graphics that we may have the next day. So if you missed anything and you can't find it in the video, you go to smaulgld.com and you can check out those materials. All right, I think that's it for the gold and silver. So let's move over to crypto. First, let's take a look at the prices. I mean, by the time I put these up, they change. But I got to capture a screenshot. And here's what we have for Bitcoin. Let me just make sure nothing has changed dramatically since it has a bit, but not really. Well, this chart says that Bitcoin is at 52.59, and right now it's at 50. No, it's moving right now as I'm looking at it. It's at 52. It's still moving. 52.19, 52.18. So it's up a little bit. But you can see in the chart there, Bitcoin fell earlier in the week, and it looks like it's moving back up. It has held above 5,000 after that little brief dip. It had gone as high as 5,500, fell down to about 49 and change. And the last few days, it's held its position above 5,000. Ethereum, it's kind of a dud lately. I mean, at least compared to the big moves that Litecoin made and to a lesser extent that Bitcoin made. Ethereum is not getting much traction after that big rise up to about $178. According to this chart, about a half an hour ago, it was at 167. And here I have it, let's see, at 166, so it's not moved very much at all, and that's pretty much flat in the last 24 hours. Litecoin also had a huge run-up in its big run-up to over almost $100. Fell down, as you can see, but it looks like it's held above the $76 level, and currently, at least this chart says it was about $80, and this chart here says it's $79.06 live. From last night, you may remember, we discussed a Bitcoin SV and all the problems they had. They were getting delisted. This was over Craig Wright's claim that he is Satoshi, and a lot of people say, no, you're not Satoshi. And he threatened to sue people that said he wasn't Satoshi. And the CEO of Binance took a stand. He said, enough of this nonsense. This has to stop. If you don't knock it off, we're going to delist you. He did. Binance, the world's largest crypto exchange, delisted Bitcoin SV, followed by Kraken, and about 7 or 8 other exchanges. And you can see it has had an impact on the price, because during this crypto rally, you can see the far left of the chart, Binance did participate. Bitcoin SV did participate in the rally up to $82, but then you could see it fell off on the 16th and 17th, and it's still drifting lower. And it looks like it's at about $55 as of about a half an hour ago. Let me go over to CoinMarketCap, and it looks like it's just hanging by a thread at 55. I think at 55.04. Talking fast tonight, isn't that good? I can talk as fast as what's that little guy's name? David Shapiro, but I choose not to. Oh, it's at 55.62. Okay. What else do we have with the crypto price? Nothing there. Let's look at some adoption stories. Interesting point here is this guy is a big Bitcoin proponent, Pompliano. He says earlier this week, Bitcoin processed 7 billion on-chain transactions in a single day, and that's at a run rate. If you do that in a single day, that's a tremendous amount. I mean, if you were to take 7 and multiply it times 365, you're looking at 2.5 trillion. And it says here Venmo did 62 billion in volume in 2018, and then he's doing his math. That means Bitcoin did more than 11% of Venmo's annual volume in a single day. Bitcoin is the killer app. Okay. Another story out there, always trying to say that what a waste of energy Bitcoin is. I mean, it's all relative. It's what you think there's value in. But that is how they do solve those math problems that validate the transactions, is getting 6 confirmations. And it gets harder and harder as we go along. And they're saying Bitcoin mining in its 10 years of existing has consumed as much energy as U.S. cars do in 3 days. And then I wonder, what about fiats? Fiats use less energy than Bitcoin, or is it fiat currency? Not quite sure, but it's not as much energy as people like to make it out to be. But of course, any energy used that it's not sustainable, not meaning unsustainable like the gold-silver ratio, but not sustainable coming from sustainable sources, then they'll say it's killing the planet and they'll want to shut it down because it's causing global warming. Another story I've been covering here, as a joke, I think I didn't mention it last night, I had it on Twitter, that they should give all of the migrants Bitcoin or Dogecoin. when they get here. You might as well set them up. It's not just enough to bring them into the country and send them to a sanctuary city. You got to hook them up with some means of payment. Well, today I saw a story in Forbes, and this author, was saying that Trump could push people towards Bitcoin. And the secret behind this headline, clickbait, is that if the United States goes ahead and puts on a remittance tax, remember, a lot of Mexicans come to the United States, they do their work, and then they send their money back to Mexico. And a lot of people complain about that. They say they're not spending the money in the U.S. economy, and that is an issue because not only they're not paying taxes, they're not adding money to the economy. It all goes back into the Mexican economy. So the idea is you put a remittance on that. Well, one way around the remittance, as you know, is you can get Bitcoin and ship it back and avoid the remittance tax. And of course, if the government catches on that lots of foreigners are doing that, then they're going to try to do something. So it's probably not the greatest idea to try to be promoting that if you are a Bitcoiner, hoping that thousands and millions of illegal immigrants come to the United States, earn some money, and then convert it to Bitcoin and then ship it back to wherever they came from. So mass migration equals mass adoption. Not quite sure that that's a positive scenario. What else? Institutionalization is something we've been talking about for a while. Now remember, we have Fidelity digital assets is already up and running. It's got a limited number of institutional clients. They say they're going to add more. Bakkt has not come out yet. Bakkt is that platform that supposedly is going to have physically settled Bitcoin futures, meaning instead of cash settled, you'll get your Bitcoin, or they'll put the Bitcoin in your name in their institutional storage. And that is a platform that is going to be run by the New York Stock Exchange, or the owner of New York Stock Exchange, International Continental Exchange. Also partners with Boston Consulting, Microsoft, and Starbucks. But that's not up and running yet, nor are any of the Bitcoin ETFs that have been proposed to the SEC. There's two pending big right now, Bitwise, and then also Van Eck and CBOE. We may get both of those or neither of them this year, and we should probably get Bakkt up and running later this year. Now, ErisX is also a joint venture. I think it's TD Ameritrade and a couple of others, and they're looking to bring forward a exchange where eventually retail, I suppose, not just institutions can, and the same with Fidelity. Eventually, they want to offer that trading option to retail investors. Now, remember, Binance, the world's the one who delisted Bitcoin SV, they are the largest cryptocurrency exchange in the world, and they made about $70 million in profits in the first quarter. So it is a very lucrative area. There's a lot of high volume trading in cryptocurrencies. They said it's only 7% institutional, 93% retail. So you can imagine a Fidelity, a Charles Schwab, a TD Ameritrade, anyone who's running a stock trading business realizes that as a percentage of trading, they're going to want to get some of that crypto trading, and that's what Fidelity Digital Investments about, and that's what this ErisX is. Now, ErisX is not pumping cryptos. They ask, is institutional interest in digital markets dead? And then they have this read our view on regulated digital asset marketplace and how current participants have helped the market mature. And the long and short of the story is they're saying that a lot of these larger institutional plays have not gone live yet. Does that mean there's no institutional interest? And they conclude, we want to leave you with a comparison between blockchain technology and the electric motor. While electricity was initially developed and deployed in factories to replace the steam engine, it was the factories that eventually had to be redesigned around the unique capabilities of the electric motor before its full potential was realized. Before productivity gains were realized, some institutions chose to stick with steam. At the time, one may have been tempted to conclude that institutional interest in electric motors was dwindling. To take advantage of electricity, factory owners had to think in a different way. So the analogy he's making is that while institutions may be interested in moving into the crypto space, they don't necessarily have right now. It's not ready for them, and that's ErisX is planning to launch their platform, back to launch theirs. And we have seen that endowments are moving into cryptocurrency space. And again, if you use the 1% rule, That's a Smaulgld rule that it makes sense as a matter of not of speculation, but of actual portfolio management. If you put 1% of your assets in a speculative asset, could be crypto, could be biotech, could be anything, and you lose on that asset, well, you've lost 1%, and chances are the rest of your portfolio performs if it's properly allocated, properly diversified. Losing 1% is not really going to impact you at all. However, if that 1% speculative asset in the 1% rule goes up tenfold, well, that means the entire portfolio will gain 10%. If that 1% asset, speculative asset, goes up 100-fold, it means that the portfolio can actually double just on the strength of that 1% asset. And that's why it does make sense for institutions to invest in crypto, not because they're endorsing crypto, not even because they believe in it, but because, in a sense, it's prudent, actually, to speculate. It's not prudent to speculate with 10, 15, 20, 30, 50, 100% of the portfolio, but a 1% is a good thing. That's a good thing. And it is a good thing if it happens to hit. If it fails, you've lost 1%, and hopefully you've been prudent in your other investments. Or you could write a book, and you can become a millionaire. And if you write 10 books, you could become a billionaire. All right, investment. What do we got in investment? Well, there's a couple of... This is what I see all the time. This is why I think there's big money in this kind of stuff is... Here's a company. I don't even know who these guys are. Gadio raises $64 million for launch of new exchange of cryptocurrency. Bingo. Very easy to do. A lot of money flowing in. And a lot of this money, will probably go the way of .com money. A lot of it will just be burned away and you'll never see these companies again. But the idea is generally when fortunes are poured into these types of things, they are generational. I wouldn't call them generational Ponzi schemes, but the .com investment, the .com innovation did lead to basically a .com economy that we have right now. Yes, a lot of the money that was poured into some of those companies, they're all gone, but every company now has a major .com presence, e-commerce, Walmart.com, Amazon.com, you go down the line. Every company is intranet-based now. And they're saying, I don't know if it's true, but maybe 10 years from now, all money will be crypto-based. It's possible. It looks like it's happening with the amount of money that's pouring into this. There's a lot of interest in it happening. Could all fail. There could be a technological breakthrough or technological breakdown. Never know. It's just another one. Bolt Labs raises $1.5 million seed money to boost Lightning privacy. That's another thing they're trying to get off the ground, which is the Lightning networks. All right, I think we're through with crypto. Last night we talked about Rakuten. Remember them? They're going to have in June, they're going to be offering, this is the largest e-commerce platform in Japan. They call it Japanese Amazon. They're going to be selling cryptocurrencies. Now, you can already use cryptocurrencies at the e-commerce, but I pointed out, I mentioned last night, I couldn't think of the name of the blog post, and let me just find it here. Nope, that's not the one. The blog post and the YouTube that I had done about this, and I called it, and this was back in August 2018. I said, the coming merger of crypto exchanges, e-commerce, and social media platforms. And I think that is going to be a trend, and it looks like Rakuten is actually going to do it. They have a crypto exchange, they have an e-commerce platform, and they also have a social media platform, and they also have a bank. Now, you talk about being able to totally understand your customer and then sell them everything, sell them money, so to speak, cryptocurrencies, and then sell them products, and then track them along and sell them ads on the social media platform, and then hold their other yen and everything in the Rakuten Bank. It's just, I'm not saying this is a good future. It could be a dystopian future. You may have 4 companies around the world that do this. If Amazon gets into banking, sets up mergers with Facebook, and then they issue Facebook coin, and they have a crypto trading platform, and an e-commerce platform, and a social media platform, and a bank, that would be the Northern Hemisphere on the west side of the Atlantic. You could have a European one do the same thing, a Pan-Asian one. Who knows? Just something to think about. That is speculation. I label it as such. All right, let's get into all of this gold, back yuan, end of dollar hegemony, multipolar world, dollar collapse. A couple of stories today just made me think about this. Sun Tzu. First of all, this story caught my eye. It was an Asian Nikkei. It was also in Zero Hedge. The Bank of Japan is the top shareholder in most Japanese stocks now. So the central bank on track to overtake the state-run pension fund next year, which means between the state-run pension fund and the Bank of Japan, there's no regular, mom and pop buying of stocks. The whole stock market is government owned. And we saw yesterday, I think it was, we were talking about how buybacks, corporate buybacks, are really what keeps the U.S. market afloat. Tremendous amount of money that pours in that actually puts a floor on the market. Well, here in Japan, it is the Bank of Japan that owns half of the stocks in the country. And then I saw another story, we get this end of dollar hegemony. But I saw in the ECB, Holger again, and this is the reason I noticed this is the typical gold pumper story is the United States has got unsustainable debt and it's going to collapse and the world is going to de-dollarize and all that. And that all sounds fine, but de-dollarize into what? Well, let's take a look at the euro. Now, the European balance sheet, many people, I guess they're still, a lot of times these narratives, they were created like 10 years ago, just like end of the petrodollar, created like 20 years ago. And they never update the story. So yes, when the United States first did QE and China had not yet to become the biggest debt Ponzi scheme on earth, and the ECB had never even thought of doing QE, well, that made sense. You can say, well, the United States is out in front. They're printing money. It's unsustainable. The United States just prints money and the rest of the world is prudent. It wasn't necessarily true, but it was definitely more true then than it is now. The problem with that argument is we're going to compare the Fed balance sheet to the ECB balance sheet. ECB balance sheet. ECB balance sheet. Well, there's your ECB balance sheet. European Central Bank balance sheet. And look, back in 2008, 2009, they had a modest 1.5 billion balance sheet. Well, now they're at 4.7 billion. Look at that. And they've shown no signs of slowing down. They're still doing their QE program. They still have their rates at zero. No plans to raise them at all. And if you recall, if you look in 2014, that is when the Fed had stopped doing QE. Stanley Fischer, vice chairman of the Fed, had spoken to Mario Draghi and say, hey, how about you do some QE? And he had mentored Mario Draghi, and he said, hey, why not? I do QE 2. No, QE 3, QE 4. Anyway, they're at 4.7 $4.7 trillion. I'm sorry, I said $1 billion. That's nothing. So they started at 1.5 trillion. Now they're at 4.7 trillion. And as Holger points out, that is equal to 40% of the Eurozone's GDP. That is more than double than the Fed's. The United States and the Eurozone are approximately the same size economies, the Eurozone being slightly bigger. But the ECB balance sheet is now, because of all the QE they've done, 4.7 trillion euro, which is like $5 trillion. But look at the Fed balance sheet. That's better. It's about $3.9 trillion. So it is almost $1 trillion less than the ECB. And you can see it's heading the other way. All this end of dollar hegemony. No, the dollar is getting strong. This is all relative. It's not like this is a good situation either, that the Fed's got a balloon balance sheet of garbage on it at 3.9 trillion. It's just that if you don't like this, what are you going to do? Sell your dollars and buy euros? Well, let's take a look. One's going in one direction. You can see the Fed balance sheet shrinking, and then you can see print of the money, 4.7 trillion at the ECB. So the euro, and the euro has more political problems than the United States has. They got Brexit. Well, not that Brexit is part of the monetary union, but they're part of the EU and they want out. Italy is making noises. They want out. You've got problems in the periphery with Greece and Spain and Portugal with massive debt. So the euro is not a very solid currency, and yet the euro is the second most widely held reserve currency. And then after that, it falls off. Between the dollar, the euro, you got a little Japanese yen, a little pound, a little Swiss franc, a little Australian dollar, a little Canadian dollar, and bringing up the rear, very scant amounts of Chinese yuan, and that's gone nowhere the last 10 years. But China to crush the dollar, and they read Sun Tzu, and they've got gold. That's gone nowhere. And then the end of the petrodollar. And remember, we've been talking about this nonsense about end of the petrodollar for years. This is just in the last year here, where I've been talking about the new petrodollar backed by U.S. oil. The whole idea that the petrodollar, that because Saudi Arabia prices its oil only in dollars and sells it in dollars, that somehow the world still only holds dollars because they need to buy oil from Saudi Arabia. That's nonsense. Countries hold dollars for a variety of reasons: to fund their debts, to hold as a reserve asset, and yeah, they may use some dollars to buy oil from Saudi Arabia, but Saudi Arabia is no longer the largest oil producer in the world, nor are they the largest oil exporter. That goes to the United States. So if you want to believe the argument that somehow countries need to hold dollars to buy oil, well, then they need dollars to buy oil from the United States. But that's not even a good argument. But the other point is, the United States and Saudi Arabia's relationship hasn't gone anywhere. This idea that China's going to force Saudi Arabia to accept the yuan. No, they're not. And that's gone nowhere. The United States has taken a blind eye, basically, to 9/11, taken a blind eye to the Khashoggi murder, and has reneged on the Iran deal. So, countries, if you believe that the only reason countries hold dollars, which is not true, which is to buy oil, well, then they need dollars to buy oil from Saudi Arabia and the United States. But end of the petrodollar, dollar collapse, reset, SDRs, these stories never end. End of dollar hegemony. And then there's Sun Tzu. Now, the other thing about China that's going on at the moment, the U.S. trade deficit with China has finally started to shrink. U.S. trade deficit falls in February as a shortfall with China decreases 28%. Remember about 6, 7, 8 months ago when the deficit increased and everyone was guffawing, yeah, great job, Trump, look what you did. Yeah, you're trying to shut down on imports and look, it went up. Yeah, and I said at the time, the reason for that was American manufacturers, American importers decided if this was really going to happen, they were going to load up on Chinese imports. And I said, what'll happen is once the tariffs are in place, either the ones that they were threatened or the ones that actually put in place, then the trade deficit would start to fall. And we're seeing that right now. But Sun Tzu and China is going to crush the dollar. Heard that all the time. Sun Tzu. Yeah, China to crush the dollar and Sun Tzu. Weak Chinese imports push U.S. trade deficit to 8-month low. Even Reuters had to say, suggesting President Trump's America First policy is working. Remember, trade wars are easy to win, was what Donald Trump said. All right, now finally, let's take a look at China. Remember, China's dumping treasuries, and China's got gold, and China's gold they're just going to revalue it, and it's going to be end of dollar hegemony because China's smart, and they're buying gold, and they're stacking gold hand over fist, just like Russia. So a while back, I don't know, it's a year or two, this is like back in 2017, I asked the question, can China's gold save it from a debt collapse? The answer is absolument pas. No, cannot at all. And this chart, well, this is just a screenshot of the YouTube. Let me just show you the chart here. The other one is China's lying. They've got more gold than the PBOC says they have. Yeah, I've heard that story. Yes, there's lots of gold in China. It's just not all in the People's Bank of China. And if China did want the country, since it has firm control of everything that goes on in the country, they know exactly what everybody's doing, what they're thinking. There's a big surveillance state. So if they really did want the gold that is not at the People's Bank of China, first of all, a lot of it's at places where they know exactly where it is and it belongs to them. It's at subsidiary banks of the People's Bank of China. It's other state-run banks. It's in state sovereign wealth funds. It's on the Shanghai Gold Exchange. And then they probably know anyone who's ever bought gold in China. But the point is that China's debt has exploded in the last 10 years. This chart from 2017 is woefully inadequate. It says they have 28 trillion in debt. The number is probably about 80 trillion in debt, and maybe half of his bad debt. I don't even know if I'm exaggerating. Their own numbers say that their non-performing loans are anywhere between like 30 and 60%, depending on the industry. Massive debt. That's how they drive their GDP. That's what they've been doing. They were trying to slow down 2 years ago. A former People's Bank of China chairperson said that we've probably already reached the Minsky moment. We should be deleveraging. They were going to stop with the building of skyscrapers that no one was going to live in, stop building bridges to nowhere, and they were going to focus on becoming a service economy. Well, when the tariffs came, that went out the window, so they said, well, I guess we got to do some more, we have to print more yuan, and we got to do more infrastructure, so we got to find other places to spend it that is one step ahead of just digging ditches and filling them back up. So they decided, well, they're going to make more municipal parking lots. They were going to do a whole bunch of stuff. And so essentially now they're getting less bang for their buck from the yuan that they're printing. But anyway, this chart shows that at the time they had 28 trillion. Let's just be nice and say it's only $60 trillion. Well, the gold on the People's Bank of China's balance sheet, let's say they have about 1,885 tons. It's worth $80-90 billion. I mean, you're not even getting close to it. Okay, well, let's say, forget the People's Bank of China. Let's take all the gold that they've imported in from Hong Kong. That's about 10,000 tons in the last 19-20 years. So we'll add that. We'll add in the Chinese mining of about 450 tons a year. We'll add another 5,500 tons, maybe 6,000 tons. I don't know, who knows? Maybe there's some they've been importing through Shanghai. Let's give them 20,000 tons. Let's give them 25,000 tons. Well, even at that, even if they had 25,000 tons and it was all earmarked and put right in front of the emperor, and they said, there's your gold now, well, that gold would be worth about $800 billion. Remember, they owe like $60 trillion. That's not going to do anything. Oh, no worries. China will just revalue the gold. Yeah, just like that. All right, so they revalue the gold to $4,000. Then they got $2.5 trillion. Maybe they're getting somewhere. If they revalue gold to $10,000, now they got $6 trillion worth of gold. Now remember, that is so far-fetched, they're just going to revalue it. I don't know how that's just going to happen, but let's just say it happens. Now, it may happen, but not because China does it on purpose. It may happen because I would think if this Chinese debt Ponzi scheme implodes, that may drive gold to $10,000. It's not the United States that's at the biggest risk. The biggest problem is China. China is at the biggest risk of exploding, not because they're in the driver's seat and they're just going to say, Sun Tzu, now it's time to revalue gold at $10,000. No, what might happen is the price of gold might rise to $10,000 if this Ponzi scheme implodes. But if the price of gold was $13,000, they still would only have $8 trillion. They'd still owe $60 trillion, $50 trillion. So this idea that China has gold, the United States doesn't, and therefore it's game over and game changer, no one's looking at numbers. They're just making up stuff. Well, the other thing that they like to say is China's dumping treasuries, gold back yuan, game changer. Yuan talks from China says China's holdings of U.S. treasuries increased for the third consecutive month in February to 1.131 trillion from 1.12 trillion in January, according to the U.S. Department of the Treasury. China remains the largest foreign holders of U.S. treasuries, but they're dumping treasuries. Now I'll give you a chart. I follow this every month and following it for 7 years. Let's take a look at how China's been dumping treasuries. There you go. 2 years ago when is that? January 2017, they had 1.051 billion in treasuries, and now they have 1.130.9 billion in treasuries. I don't see any dumping going on there. And by the way, the market, I think foreigners own 60 trillion of the it is such a deep market. Google, Amazon, Facebook, Apple, they all own hundreds of billions. If you add them up, just corporate America owns hundreds of billions of dollars worth of treasuries. So it's not just we rely on, that's the other one. The United States relies on foreigners to fund its debt. To a certain extent, that's true. However, they fail to recognize that a lot of this debt that is held by foreigners is held because that's how they fund their debt. They issue dollar-denominated debt. So all this end of dollar hegemony, United States prints money, the rest of it's just a gold pumper narrative. And the reason at some point, yes, there's always at some point unsustainable. Yes, everything unsustainable. But they make it sound like it's going to happen imminently. Remember, if anyone has been following any of this stuff, you can go back to end of dollar hegemony from Ron Paul from 1985. They've been talking about the end of the dollar since Nixon ripped up the Bretton Woods Agreement in 1971. So I'm not saying this is going to go on forever. But what happens is people learn this narrative. They insist that it's going to happen, and you'll see, and they never, ever, ever update their thinking. They never look at anything else. And unfortunately, the people that tout these narratives are very convenient. If no one's heard this narrative before, they don't have to update their own research. They just repeat the same stuff they've been repeating since 2010. And people believe it, and they run out and they buy gold and silver. I'm not saying to go out and buy gold and silver. I'm not saying don't go out and buy gold and silver. But I wouldn't buy anything based on what somebody who sells gold and silver says. Now, I have affiliate links on my site. I'm not trying to make, I am trying to make money from the sales of gold and silver, but that's your decision. I would advise you not to buy it if you don't know what you're doing. I would also advise you, don't just listen to me, because even though I give a very thorough, and I hope to be a very objective view of what's going on in the gold and silver markets, I don't have all the answers. But generally what happens is people go to about 17 or 18 sites. They all say the same thing. Dollar's going to collapse. Better go out there and buy your gold and silver. And never question why it hasn't happened. And the people that are selling it keep repeating the same tired narrative. End of dollar hegemony, multipolar world, dollar collapse, China's dumping treasuries, SDR, reset, gold back yuan, game changer, unsustainable, silver shortage, JP Morgan. I can throw it off the top of my head because I've heard it so much, and maybe so have many of you. All right, let's go over and see what the game changers and the mug stackers are saying over in the comment section. Okay. Remember, you got to put Smaulgld in order to attract my attention. Or you can just say, Smaulgld, I'm sending you money. And I'll read your comment. Okay. Coins AZ. Hello, everyone who's not here yet. Whereas Barry says, hello. I'm blessed to make it for the start. Smaulgld is all I need to know. That is all I need to know. That's the other one. People hear this stuff. JP Morgan is buying silver. That is all I need to know. China is... The 1% got all the gold and all the silver. That's all I need to know. Yep. Good old Bernie. By the way, if you saw the picture, let me show you the picture again. That is the Bretton Woods photo. Bretton Woods in New Hampshire, the mountain there. Let me see if I can find it. That is where, there it is. That is where the countries met at the end of World War II. In 1944, John Maynard Keynes was there, founder of Keynesian economics. And they met to discuss how they would have the world's financial system operate. There was talk about returning to a classical gold standard. There was a talk about going to this thing called the Bancor, which is what Keynes wanted, some artificial currency. I guess it was like the precursor to the SDR. And they finally settled on this. I think it's kind of perverse. They said the dollar is a reserve currency, but the dollar has to be backed by gold. Now, if you think about that, that's not a gold standard. Because the dollar wasn't backed by gold in 1944, 1950, 1955, all the way up to 1971. As an American, you couldn't go and get a dollar's worth of gold at a bank. You could with silver. You can get silver certificates. You can get an ounce of silver for a silver certificate. This was a gold standard, meaning it was really a dollar standard, whereby anyone who signed this agreement, any central bank that signed this agreement in 1944, the Bretton Woods agreements, was entitled to bring their dollars to the U.S. Treasury and get the equivalent amount of gold at a conversion price of $35. That all worked in 1944 because the rest of Europe, they were the only major countries that were really of any significance economically, and they were really of no significance economically, so they were destroyed after the war. But in the 40s, as they did their trade, of course they got some dollars, but the United States was a net exporter. So there weren't a lot of countries bringing their dollars over to the United States to get their gold. Well, that changed. As we know the history of the United States in the 50s, Europe got more, they had the Marshall Plan. They started to do better. They started to accumulate dollars. And in the United States, you had the Great Society with Lyndon Johnson. Lyndon Johnson went on the whole welfare warfare state. He was sending 500,000 troops to Vietnam. He was increasing Medicare. He was increasing welfare, housing projects, work projects. The United States was in a space race trying to put someone on the moon. A massive amount of spending. And by the time Nixon got into office in 1969, after the 1968 election, it was pretty apparent to the French, even in the mid-60s, the Swiss, the Germans, that they better go and get their gold, because they just didn't think the United States would have it, because the United States started running not only deficit spending, but trade deficits, which means that there are more dollars out there that could come back for the gold. And that's exactly what happened. That's why Nixon said, screw this, and you can't get any gold anymore. And so there it all happened at Bretton Woods in New Hampshire. They met in that hotel and decided to anoint the dollar as the world reserve currency. And it still is. But fiat currencies only last, on average, 41 years. And therefore, we are past that time period. So it must end soon. And I will make a lot of money when I sell my 500 ounces of silver for a single-family home. You just hear this stuff, and it's disconcerting. It's okay to throw out as a speculation, but not as a 15-year thesis. Okay. Sorry about that. Let's carry on. Come on. Let's see. Game changer, says Chicago. LOL, says Andrew. Clickbaiting mofo. This was clickbait. Dollar collapse. End of dollar hegemony. Alert. How about alert? Must listen. Must listen. Goodness gracious. People fall for this stuff. It's unsustainable. Greenback is king, says tossing Molotovs. Where's Barry? Yeah, someone was saying in the comments over on Rory's, in the interview I did with Rory, maybe you go over there and leave a comment. They said something like, Louis Smaulgld is a moron. He doesn't understand. He should listen to Rob Kirby and Jim Willie. Okay, I'm going to learn something from that. You can hear the same story we hear for the last 10 years. Manipulation. Tossing Molotovs. Smaulgld, the big bullion retailers are not charging sales tax. It's a big deal for those who live in Soviet-controlled states. There's, however, no sales tax added to my gold money account. Now, here's the issue with the sales tax. While the Supreme Court, I did a little research on this, the Supreme Court said it used to be that a state could not charge sales tax or force an out-of-state or retailer to charge sales tax. It was like unless they had some type of nexus to the state. So, for example, I am a Connecticut manufacturer, or I'm a Connecticut bullion dealer, and I sell bullion around the country. And I only have one office, and it's in Hartford, Connecticut. I saw it was happening. As I was talking, I know exactly where I got cut off. Okay, let's say I'm a Hartford bullion dealer. I have no salespeople anywhere. I do no advertising anywhere other than the internet. I don't step foot. None of my employees step foot in any other state in the United States other than Connecticut. Well, that means that a state can't force my Connecticut company to charge sales tax in their state. Well, there was a Supreme Court, and then what happened was there was some exemptions that, well, Amazon, because Amazon took advantage of this, but then a lot of states said, whoa, Amazon, you're connected to my state. You've got offices here. You got warehouses here. So Amazon started charging sales tax in those states. So there was a Supreme Court ruling over the summer that said that states could institute a system whereby they could require other states to collect sales tax. Now, a lot of states have said, no, we're not going to force our companies to become tax collectors for your state. So I'm not sure how that's playing out, whether bullion dealers are charging the sales tax. The question is whether Tennessee has the right to go after a Connecticut company for that sales tax. I don't know how that's all going to work out legally. So, and I don't know what point of view the bullion dealers are taking. But it's not just bullion dealers. It's any company. If you have an eBay account and you sell stuff around the country, now in most states there is a de minimis exemption. Like you have to sell $1,000 in a state, $10,000 in a state, and in many cases, like for bullion, there's already a tax exemption. So anyway, that's something you got to look into. I'm not sure what's going on with all that, but it does make it very complicated. Can you make one state required to collect tax for another state? You would think it would be the obligation of the consumer. So, for example, there's a thing called a use tax that if you buy something in one state and you don't pay tax, but you bring it into your state and you would have paid tax in that state if you had bought it there, you're required to fill that out and say, okay, state, here's the money I'm going to pay it to you. So it's very complicated. Not having the way Europe gets around, I think they have a VAT. It's just it's like a national value added tax. But a lot of places have city tax, state tax, county tax. It gets very complicated. So if you're in, like I mentioned, let's say you're a bullion dealer in Connecticut and you're selling it to Knoxville, Tennessee, and they have a state tax and a city tax and maybe even a county tax. I mean, how do you even know if you're in Connecticut what you're supposed to charge? And I'm sure what happens is they don't charge anything, and then it's up to Tennessee to find out and then try to bring the Connecticut dealer to court, and then the state Connecticut say, you go away. It's going to be a lot of litigation, I would imagine, if the states try to force the other states and the other merchants in other states to collect sales tax. Now, with Amazon, it's easier. And Amazon, because it's so big, probably has all types of software where when you order, they know exactly where you are and what tax to charge. But it makes an added element of administrative that it makes it harder for a small merchant to take care of. And that's why there's de minimis exceptions if you have to sell $10,000. But there's a couple of states, I believe, where they try to make it like if you sell anything, then you have to collect the sales tax. All right, JMP Bank. Let's see if I got anything else. DB Stupid says, hello, muggers. Chuck Platt, Lewis, do you believe Russia has a strong economy, and if you would advise buying rubles? Well, if you look at the ruble's been a very weak currency the past 5 years. It's very, you would think a country's currency, they say, is based, this is what Nixon said. Once you go off the gold standard, right? It used to be in the classical gold standard, it was very simple to figure out which country was doing better. If a country had massive exports, it meant it got more gold in, which meant its currency was stronger. And it would all work its way out. It'd go back and forth, and it was easy to tell the strong economies and the ones that had more gold, because if you export a lot, you're going to get a lot of gold back. If you run a deficit, you're going to have to export your gold, so your currency is going to be weaker. But then because it's weaker, you can export more, and then the gold comes back. And you can see that's a very nice mechanism, the classical gold standard. But today, for example, Canada has a AAA rating, one of the highest ratings. Very few countries that have that rating. I think Sweden might have one, or Norway, and they have no gold, or Canada has no gold. Russia has 20% of its reserves in gold. It's got $450 billion in reserves. It's got I wouldn't say a strong economy, but because they're under sanctions and because they are limited, and their economy is limited to essentially food exports and oil exports, the currency doesn't do very well. It might be counterintuitive, and then you would say, with all the debt that the United States has, why is the dollar the strongest? So there's demand for currencies outside of the fundamentals. I don't know if that's your answer, but I don't do speculation in foreign currencies. All right, what else do we got in the comments? Yeah, there are a lot of people were drawn into that Iraqi dinar scare. That was the same thing. They're going to revalue the dinar. It's going to be backed by Iraqi gold. Never believe this stuff here on the internet. William Birkenrod, okay. Flash sale. All right. Fiona Whalen. I had to close my eBay store because of the Supreme Court ruling on state and local sales tax. I just don't know how to deal with it, what the implications would be. Yeah, that's too bad. See, it doesn't harm Walmart or Amazon because they know how to deal with it. You would have to do like a 50-state survey and figure out, how you're gonna deal with all the different places, how you're gonna collect the taxes, how you're gonna send the taxes to the individual states. Becomes quite difficult. All right. Yeah, Ashton says Canada has all the ground they need. It has all the gold they need in the ground. There's a lot of countries that have a lot of gold in the ground. They have crappy currencies, though. A lot of gold in, like, Tajikistan. They don't have a good currency. Kazakhstan has 50% of their reserves in gold, and they have a lot of gold in the ground. That's not why Canada has... See, people, they like to bring that up. Oh, but Canada has gold in the ground. That's why they have a AAA rating. That's not the reason. It's because Canada doesn't have the same debt load as the other developed nations, and it does have a decent economy. It's not because it has gold in the ground. Gold in the ground would mean that Kazakhstan would be the strongest currency. You don't even know the name of the Kazakhstan currency, the tenge or something. Gold, that's also another thing. Having gold does not boost your currency. It's insignificant. It has nothing to do with your currency. Really, it's the demand for your currency that gives it value. And the dollar is in biggest demand because that's just what everyone uses. All right, I think that's about it then. I do want to thank everyone for joining me this evening. And we will see you tomorrow night. And today is Wednesday. Yeah, so we'll see you tomorrow. It's Thursday night. And if there's any questions, I'll give you a Bernie 10-second countdown. Yeah, hold on. Anton says, I just mean that's why they can sell their gold. They can always dig up more if they need it later. Oh, yeah. Oh, that's true. But, a lot of things that people don't remember. I'll use that same argument with the United States. If somehow they don't have gold, the United States produces 250 million ounces of gold, 250 tons of gold, 200 tons of gold a year. The United States got decent gold reserves, and they do produce a decent amount of gold. Doesn't end up at the U.S. Mint to sell to Americans because they sell a few 100,000 ounces a year, and that's about it. All right, what else do we have here? All right, that looks like it's it. I'll give you the Bernie Sanders 10-second countdown. If I don't see anything, then we will say good night. So, let's start with the number 10 and go to 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Oh, we have a question here. So is the U.S. did not have a strong military, the dollar would be? It's not just the military, because Europe doesn't have a strong military, but Europe has a strong currency. Europe has a weaker military. See, a lot of people think that the United States dollar is solely based on the military. It's not. It's a good part of it. But remember, you can't have a strong military without a strong economy. It's very hard to do that. Maybe South Korea has a strong military. China has a strong military. Why is the Chinese reserves in yuan only 1 to 2% of global reserves? Because no one trusts the Chinese yuan. It's not because they don't have a strong, they don't have a big economy. It's not because they don't have a strong military. It's because their currency, it's totally debt-based. People don't trust at all their numbers. They've got capital controls. They're subject to devaluation. So it's not just about the military. A lot of people, that is all I need to know. The United States has a military, and that is all. Yeah, but the thing about that argument, it cuts both ways. If the United States has this strong military, but somehow they don't have any gold, they're such weaklings, they can't somehow figure out how to buy, and the United States prints a lot of money just to, it makes no sense for the U.S. not to have gold. If it's important for the U.S. to have gold, the argument is they can print up the money and go buy it, they can take it from their own mines, or they can just go around the world with their military and take it. I mean, the idea that the United States doesn't have gold and that somehow, and first of all, and that it matters, if it really mattered for the U.S. to have gold, you don't think they can have 4,000 tons pretty quickly in Fort Knox if it wasn't there already? It's ridiculous to think that. All right. So is it faith in the fiat? Absolutely. Countries run their, especially, go to Argentina. They want your dollars. They don't want anything else. I made the mistake when I went there. I converted my dollars into pesos, and I went to pay, and there's like, where are the dollars? I'm like, don't you want your peso? And they said, no. The world runs on fiat. It's only in the small corner of, I have gold, and that is all I need to know. And the world doesn't think that way. Silver has been money for 5,000 years. It is rarer than gold. Those are just things that you hear in a small corner of the internet. Pumper channels. The world does not think. It is fiat, and it is worthless toilet paper. That's not how they think. They run entire economies, emerging markets on dollars. They don't run it on gold. But they will find out that it is a debt-based Ponzi scheme. Yeah, maybe they will. It is unsustainable. Okay. Hasta luego. Oh, we got someone from Sverige here. Detta bra. I've lost faith in the Swedish currency. Yeah, there's Michael with the same story. The gold has been taken by the military, though. Okay. So, why would the United States have no gold if all they do is run into countries for the express purpose of stealing their gold? Well, then the United States would have so much gold. So if that's all they do. See, that's why the gold pumper story is almost like it's... They can't hear anything that isn't other... The narrative has to be true no matter what. If the narrative is the United States doesn't have gold and that's good for gold, then the United States doesn't have gold. If the narrative is, well, the United States is a nasty country and because of that, they're going to de-dollarize because all the United States does is go and take everyone's gold. Well, that contradicts the fact that you're saying the United States doesn't have gold. If you think about all these gold pumper stores, I rattled them off a couple of times tonight. They're all nonsense. Every last one of them. J.P. Morgan's buying Silver Eagles. Of course they are. All right. Good night, everyone. Is gold real money? Real money. The only thing of value is real money. Good night.